airlines are projecting a sharp drop in financial losses next year as the industry gradually recovers from the health crisis. The International Air Transport Association predicted that net losses at airlines would narrow to under $12 billion in 2022 from nearly $52 billion this year. While airlines across all regions are expected to perform better, those in North America are forecast to return to profit next year. And with a rosier outlook, a new pledge from the airlines industry. Global Airlines agreed on Monday at an industry meeting in Boston to step up plans to tackle climate change, facing mounting pressure from regulators and environmental groups over the impact of billions of passengers expected to take to the skies in the coming decades. The IATA, which groups 290 airlines including leading state carriers, committed to reaching net zero carbon emissions by 2050, despite opposition from Chinese airlines. IATA Director General Willie Walsh acknowledged the new commitment would be an additional challenge at a very difficult time, but appealed for unity.
It's going to require everybody working with us to raise their game. It's not just going to be achieved by airlines. We need aircraft engine manufacturers, air traffic controllers, airports. We need everybody to contribute in the interests of the environment and in the interests of sustaining the industry.
Demand for international travel is expected to double next year and reach 44% of pre-pandemic levels. Vaccination rates and the lifting of government-imposed border restrictions will determine the pace of recovery.
A sharp retreat by big tech stocks and concerns about a potential government debt default slammed Wall Street Monday. Rising treasury yields and troubles at Facebook drove investors to cut their positions in stocks like Apple, Microsoft, and Amazon. Facebook had a particularly bad day. A whistleblower accused the company of repeatedly prioritizing profit over clamping down on hate speech and misinformation, and shares slid further after Facebook and its apps, Instagram and WhatsApp, suffered outages. Sanders Morris Harris Chairman George Ball faults Facebook for the market slide.
The Facebook whistleblower revelations have highlighted how vulnerable the big tech stocks are to outside influences attacking them, finding areas of vulnerability, and that frightens investors, speculations, and speculators alike. That's why the market's down today, and that's why the technology stocks, the big tech stocks, are down even more.
The Dow ended down almost 1%. The S&P 500 slid 1.3%. It's off more than 5% from its peak in September. The Nasdaq lost more than 2%. Tesla bucked the trend. Shares rose after its deliveries of electric vehicles hit a record in the third quarter, breezing past analysts' estimates. The automaker is weathering a chip shortage better than its peers.
Facebook, Instagram, and WhatsApp went offline for users across the globe, the social media giant said on Monday. Reuters could not immediately confirm the issue affecting the services, but the error message on Facebook's homepage suggested a problem with the domain name system, or DNS. Security experts tracking the situation said the outage could have been triggered by a configuration error, which could be the result of an internal mistake, though sabotage by an insider would theoretically be possible. An outside hack was viewed as less likely. Facebook acknowledged users were having trouble accessing its apps, but did not provide any specifics about the nature of the problem or how many were affected by the outage. Shares of Facebook, which has nearly 2 billion daily active users, fell more than 5% in afternoon trading on Monday.